G'day, this is James Sugg at Westpac with the London End of Day report for Friday, the 27th of September. Well, European markets opened a little bit higher today. A lot of information to absorb. We had the Spanish budget details released yesterday. We've got Spanish bank stress test results coming out in a couple of hours' time. Had the French budget with more taxes on higher income earners there. The Spanish and the French have maintained their commitment to achieve, in Spain's case, a 4.5% of GDP budget deficit next year. In France's case, a 3% of GDP deficit. Neither of them will make it, we don't think, but at least in terms of their official forecasts, that's their stated aim. It remains to be seen how markets respond to the bank stress test tonight. That was a precondition for the Spanish bank bailout, but there has certainly been some scepticism expressed already about the budget numbers. But that wasn't really the big driver of markets. As I say, European markets opened higher. They're all in negative territory now, as is the US market, mainly because of US economic data. We had the Chicago PMI survey for the first time since 2009. It dipped below 50. Just to give you a feel for those numbers, the headline fell 3.3 points down to 49.7. The orders component was down from 55 to 47. Just 6 months ago, orders were running above 60 at 63 actually, and production was running at 69. Production in the index today was down at 55. So we've seen big slowdown in orders. They're actually contracting now, and a big slowdown in production growth there. The Milwaukee NAPM, which is the same sort of thing as a PMI, it was below 50 for the third month running. Personal income grew just 0.1% in August, and July's 0.3 was revised down to 0.1. So that's the weakest back-to-back monthly increase in income for the year so far. Personal spending was actually a bit stronger. It was up 0.5%, so the savings rate effectively has fallen in the last few months. But whether or not that's sustainable, very slow income growth and spending growth running faster than that remains to be seen. But I think most of the focus has been on those surveys, whether it be the Fed district surveys, the PMI regional surveys. We've got the national ISM coming up on Monday. There seems to be a broad-based picture of emerging weakness in the industrial sector, at least in the US, and that's been the main driver of weakness today. German retail sales up 0.3% in August, failing to reverse a 1% drop in the previous month. A few other bits and pieces. Oh yes, the Euroland CPI accelerated in its September flash estimate from 2.6 to 2.7%, and that's been attributed to the Spanish sales tax increase. That sales tax increase actually has been a source of a lot of the angst in Catalonia. The tradition has been that half of the sales tax revenues would go to the regions where the sales tax was raised. But all of the 3 percentage point increase in the sales tax has gone into the national government's coffers. The Catalans are arguing we want half of that, but they haven't got it so far. That's it in terms of the main news today. Nothing much else to report. We've got, well, it's the end of the financial year for some institutions, of course. I'll give you the market numbers now. The UK market down 0.4%. This is about half an hour before the close. The French market's down 1.4%. The German market off 0.6%. The Spaniards down 1.3%, and the Italians down almost 2% today. And the Dow in the US is down 0.2% at the moment. You've got the likes of McDonald's marked down, Walmart, other retailers as well. Just a general sense that the economy is not doing so well. The Nasdaq's down 0.7% and the broader S&P 500 down 0.75% at the moment. In commodity markets, we've got gold prices off 1/3% at $1,775 an ounce. Oil unchanged today so far, $91.85 a barrel, and copper's up 0.4% at 376 cents a pound. The Aussie dollar is back below 1.04. It's at 1.0395 at the moment. It was a little bit lower earlier, but stock markets have just picked up in the last half hour or so. Still down, as I say, on the day, and we've still got a little while to go in European trading. All right, Reserve Bank board meeting next week. We're looking for a cut from the RBA, and we've got the Bank of England, we've got the ECB and other central banks as well. So, and also the monthly jobs report from the US coming up. So lots to look forward to next week, but that's it from me for this week. Speak to you soon.